Welcome back, traders, to the No Edge, No Trade channel where we talk all things crypto trading. What's up today? I want to discuss with you and actually show you and teach you about trading. Today, we're going to use INJ injective protocol as an example. What I'm going to show you is how to look at charts and use charts and stage analysis combined to understand at what points would you want to trade it to the long side, at what points would you like to find short trades maybe, and at what points you just want to leave the asset alone because you don't want to trade your time for money. Because you can, some people wait years until they see any returns, and that's not how I operate. How I operate is I try to find high asymmetric reward trades which act as velocity trades, meaning as fast as possible. I prefer making 50% in a week than 200% in 2 years, okay, on asset, because there are many 50 percentiles all the time. I can compound that. 200% on the other hand, you need to wait for too long. Happens, doesn't happen. Sometimes it happens fast if you know how to find it. But usually if you just wait, not as good. So let's jump into the chart and see what I'm talking about. So this is INJ, as you can see, and already you have some similarities, right? And some assets will have these similarities and some won't, but it's interesting to note. First of all, you see all this was the past bull market, okay? And now this is this current bull market and kind of bear market, okay? So look at this. This had an initial run up, almost ended, then had a last kind of kiss of breath, and then failed. Okay? Same thing here. Went back up, went back down. Maybe people thought, oh, that is the end. No, last kiss of death. Kind of people, oh no, INJ has more to go, and boom, all the way back down. Okay. Another thing you can see is that after a big drop down, there usually is some sort of a rebound. Okay, as you see over here. So again, this is, yeah, similarities that you can spot fast without even needing to know too much. Okay, this is how assets operate. Okay, this is how assets operate, and remember this until the end, because by the end you will understand everything, because I'm going to combine these things for you. So this is just some similarities. Now let's go dive a little bit deeper. Okay, as you may or may not know, I am a true believer of the stage analysis method. What is stage analysis? Stage analysis, in short, is a way or a framework to help you understand at which stage is an asset at right now. Okay, so there is something called stage one. This is called the neglect phase. The neglect phase is a sideways action. It can take a few months, a few years, where this asset is neglected. Okay, not people are looking at it, and some people, the know-hows that everyone wants to be, I don't care about being in a know-how, by the way, are accumulating this asset. Okay, then, and this is the neglect stage one. Okay, then you get the stage two uptrend. Okay, this is stage two uptrend where you want to be long. Okay, this is where you want to find continuation opportunities. This is where you want to hodl, in a sense, not by hodling all the position, but if you took a position, maybe leave a runner and trail a stop, and maybe enter multiple trades, and combined one after the other. And after stage two comes stage three topping. Looks something like this. All right, so this is stage three topping. It can have a fake out as well, whatever. Okay, doesn't matter. And after stage three, and again, in stage three, actually, it's very much like stage one. You want to be out of the asset. You don't want to be waiting, kind of speculating, will this continue or will this fail? That's not your goal. Okay, your goal actually is, after making money in stage two, you want to move to another asset that is within the stage two option. Okay, so in stage three, you want to be out of the position. Then come stage four, and that will be the downtrend or the drop, right? Downtrend, drop, whatever stage. At this stage, you want to be either out of a position or shorting the asset. Okay, this is the stage analysis. It's a very simple framework for you to understand at which stage of an asset is for you to either make money or be out of the market, not losing money and not losing time. Okay, so this is the framework that I use. Now let's go dive deeper a little bit into INJ and see what, can be viewed. Okay, so first of all, let's go to back in 2020 actually. You can see that it was in a stage one for a while. Then it broke to stage two. Then you had what I call a base and a continuation. This was a breakout you could have taken, boom, made money, maybe sold majority, maybe sold some, maybe added afterwards here, all the way back up here. You can see that if you trailed at the 20-day moving average, all this, you would have stayed in position all the way until roughly here. Let's put, a calculator of how much would that be. That would be roughly 170% in, a month or so, okay? This is stage two. Now, then it goes into a potential basing or stage three. Maybe you actually took here a trade. You made maybe some money, but it failed. It failed and started to go down. And in hindsight, you understood that this was a stage three topic. Not all stage threes you will know on hand it's a stage three, but you do want to get out of the position when you think that stage two is done, okay? But you don't really know if it's done or not, but you need to have some sort of a set of rules. For example, trailing a stop with the moving average or taking profits into strength, percentage wise, risk multiples, whatever, right? And then, of course, we went to stage four. As you can see, it was a beautiful breakdown of a neckline here. You could have shorted, let's say here, made some money on the short, and then it went to somewhat of a stage one, potential stage two again. Maybe you tried, didn't work, and in hindsight, you understood it was a bit more fluff, a dead cow bounce, and it just didn't work out, and it continued with two. It continued at stage four actually, all the way down here. So all this is stage four. You want to be trying to short here. Maybe you long a jab, try, maybe it will continue, probably stopped out, going back to shorts. You could have shorted here once. And again, you don't need to hold the shorts, okay? You could have shorted here a second time. You could have shorted here. You could have shorted here. You could have shorted in many aspects. Doesn't really matter. But as long as you understand the concept. Now, you get a real stage one. Now, you can see that this is stage one. Supposedly, this is the most lucrative entry, right? Let's take a look of how many days this was. This was 270 days of just waiting within this range. For me, that's time that I could have made money, you know, um, and I did make a lot of money shorting in May 2022. Then in July and August, I made some money longing some assets like ETH and Lunci because Lunci got a bounce and so on and so forth. So many things have happened um, back then. You break out of it, you break to a potential stage two, and you can see what do we see? You can see that you're having a breakout. You can see this was a move up, a breakout of range, and then you had somewhat of a base. Now this was a bit of a tricky base with a kind of fake out and then build. You could have taken the breakout, maybe you missed it, doesn't matter. Let's say you took it, you made some money, beautiful. You're thinking maybe we're a new stage two uptrend, but then you can see us basing and basing and basing for a while because the market wasn't ready. But again, this asset was building a beautiful, beautiful continuation base, okay? You don't need to be in the asset at this point. You just need to be waiting for this to break out. And lo and behold, in October 2023, this was something that we traded in our community and we broke out to new highs. This was the first initial trade over here. Then sorry, this was the initial breakout we took at $10. We added at this breakout at 19, and then we rode all the way back up. We didn't know it's over. We thought maybe this is going to be, another continuation like we had over here, but we don't know till after the fact. We had a breakout, fake out, back down. That was a sign of a potential top, potential stage three. And as you can see, indeed, we had this is a stage three over here. And after stage three came stage four. You could have shorted some of all this way over here. Come on, baby. All right, you could have shorted a little bit or not short, at least be out of the asset, bounce, and then continued stage four on this cycle for now. Okay, now, hopefully by now you start to understand the stage analysis framework. Now, what can you do with it? First, learn the stage analysis. It will help you to understand at what places you want to be in an asset, longing it, at what places you want to be shorting, stage four, at what stages you want to be out of the market, waiting, looking where I should, participate or not. Like stage one, wait until it breaks the range. Stage three, make sure that if it breaks down, I know it's a stage four, I can go short. Or if it breaks up, I can try a long, maybe it's a fake out. Okay, by the way, from stage three, you have like a 10 to 20%, depends with asset, to continue into a stage four because you don't know if it's stage three, maybe it's just the base. Will the real stage three please stand up? We don't know until after the fact, but you can see the volatility happening and you can see it's wide and loose, and you had your rules violated. You took your trades on the asset going up, probably being coupled with the 10-day EMA or the 20-day EMA or the 50-day EMA, whatever you prefer, and then it was violated. You got out, and of course, then probably it's basing, and you don't know what will happen. And you couple that with how assets tend to work, right? They have, even if you don't know stage analysis, look, this looks exactly like this, right? You can understand that this looks, even without a framework, you understand that this is almost a replica of what we had here, okay? So if you understand it's a replica, you can understand the probabilities of what's coming next, okay? I will leave that up to you. This was INJ lesson for you to understand how assets operate, the framework of stage analysis, and how I use it and how I used it on INJ, and how beautifully you can utilize this in your own trading and investing, whether it's short-term trading, minutes, hours, days, you can understand the trends, or swing trading like I do for days, weeks, and months to capitalize while you can, be out of the market when you need to, and be shorting if you want to, which I do want. It's an edge while you can. Okay, learn this and it repeats over and over. Till next time, no edge, no trade. Cheers, everybody.